Now, you will have heard that the Reserve Bank has left the official cash rate on hold for a fourth straight month. It's keeping it at 4.1%. But recent research by Mozo, it's a price comparison website, shows homeowners are continuing to face mortgage hardship, with some paying over 60% of their household income on their loan. Rachel Westall is from Mozo. She joins us now from Sydney. Rachel, good morning. You have done a survey of Australians. What have you found about what percentage they're paying for their mortgage?
Good morning, Madeline. Thank you for having me. The survey showed some pretty interesting results. We found that 1 in 6 Australians are paying between 40 and 60% of their monthly household income just to cover their mortgage, and that 5% were paying over 60% of that income.
That is a huge amount, and you'd have to say completely unsustainable.
Yes, of course, and it was a substantial amount. So 39% were actually paying over 30% of their monthly household income on their mortgage, and that's kind of the standard ratio in the industry for experiencing mortgage stress. So it is quite concerning.
What does that tell you then about these people's capacity to continue paying that mortgage?
Yeah, so even though the RBA has left the cash rate on hold, obviously monetary policy does work at a lag. So those rate rises that have been coming since last year are still filtering through to the economy. And it's important, especially as we have seen some lenders cutting rates, that if you haven't refinanced, it is a good time to shop around.
Yeah, so let's talk about that. We hear a lot about the mortgage cliff, the so-called mortgage cliff. That's people rolling off those fixed rate, those ultra-low ones that were fixed during the pandemic onto variable rate. Tell us about what is now available in terms of variable rates.
Yeah, so we're seeing rates from some lenders as low as around 5.5%. Compared to the average across the board in the Mozo database, which is roughly 6.61 at the moment. So that's a substantial amount. And I think it's important for people to realise that with interest rates, even the smallest percentage, difference can really make an impact, especially as home loans are 25 to 30-year loan terms. So a 0.5% difference can actually equate to tens of thousands of dollars more in interest that you're paying over the course of that loan.
It's interesting as well, in your survey, you look at the number of people who haven't refinanced. We do tend to stick with mortgages, don't we? But actually, we pay the cost for that.
Yeah, some people like to call it the loyalty tax. We found that 1 in 3 had had their mortgage for over a decade and they hadn't refinanced. And I think people think that, the RBA is on hold, so banks might not be moving. But last month we saw cuts, quite substantial cuts to both fixed and variable rates from a number of different lenders. So there is an opportunity to act now, and likely the cash rate won't come down for at least another 12 months, according to the big banks. So the time to act is now.
And just a reminder, you can refinance, but also if you are having difficulty paying your mortgage, you should always, first port of call, go to your bank and tell them, because they will try and help you.
100%, Madeline. I think sometimes we think it's better to stick our head in the sand, but it's really important to just call your lender and let them know. And there's also an opportunity for people to review their budget overall and look at comparing insurances, their mobile plans, their utility bills, because if you do compare and get a lower rate on those, across the board you could save hundreds a year that you could put towards those increasing repayments.
Yeah, don't pay the loyalty tax, hey?
Exactly.
OK, Rachel, thanks very much for joining us on News Breakfast.
Thanks for having me.